Okay, MegaWhale team, welcome back to the channel, guys. Thanks for tuning into today's video. We're going to go ahead and take a look at Bitcoin today. And the purpose of today's analysis is going to be a macro analysis. We'll be talking about the larger time frame, potential long-term swings, and much more. We've got some important charts to show you today and some interesting data to talk about as we go through today's video. Now, before we get into it, guys, head down to that pinned comment, click the first link, join our Telegram channel, get access to all of our updates, analysis, and much more information, including our videos. And of course, if you're interested in joining our VIP channel, you can go ahead and click here directly to find out more information, or click here to find out our full VIP trading track record since February 2021. Let's go ahead and get into the analysis. So as you can see, Bitcoin has more or less pushed sideways now with some larger swings for about 130 days. You know, we're talking 1/3, a little bit over 1/3 of a year now, 5 months. So we've been pushing basically sideways. Now we have had some very large, very large swings. We had a 30% swing upwards. We have some large 20% swings. We've had, another 20% swing. But as we're getting closer and closer and closer to the apex of this descending triangle formation, or at least what looks like a descending triangle formation, the volatility is starting to dry up. And as the volatility dries up, we start seeing lower and smaller swings, but it also tells us a big move is on the way. A big directional move is going to occur at some point. The price will not just push sideways out of this range. We will see a directional move. We will see a weekly move from this range. Before we get into more of that, let's go ahead and talk about this. And this is the CME FedWatch tool. You can find it online. This is a countdown to the next FOMC meeting. And of course, FOMC meeting is in 12 days and 15 hours. And basically will give us indication or give us a final data on what the interest rate hike will be. And we've talked a lot about how interest rates already impact the market. And we're not going to go over that today, but you should already know why that's relevant, how it's important, and how it's going to impact prices. And of course, we'll discuss that as the date comes closer again for the new viewers. So as you can see, if you scroll down, you get a little bit more information about the percentage probabilities or target rate probabilities for the 2nd of November 2022 Fed meeting. So we're looking at an interest rate hike here of 50, 75, 100. Now we know that because the current rate is this, okay? 0% of people at the moment are expecting a 50. 99.7 are expecting 0.75 and 0.3 expecting 1. We can overwhelmingly say without a doubt the majority or almost the entirety is expecting 0.75. We'll see how that changes as the day comes closer. Very interesting to see 15 days out. The next one I want to talk about, and this ties into Bitcoin's price action, is Bitcoin's historical volatility index. And if you've been watching this channel for quite some time, you would know that I never really talk about on-chain. I'm not a big on-chain guy. I don't really like on-chain. I think on-chain is kind of useless. But in this instance, when we see changes like this that haven't happened for so long, it is important because we can relate this to the price action and it can help explain what is actually going on. What we see here is the volatility for Bitcoin. And this is over a 30-day period, and this takes basically since the start of Bitcoin. We're talking April 1st, 2013, all the way up to the current date, okay? The volatility is currently 1.64%. Now, there's only been 4 instances in Bitcoin since 2015 where we have dropped to or below 1.64%. I'm going to say it again. In 7 years, volatility has been this low or less only 4 times in 7 years, guys. Actually, right now, Bitcoin's volatility is lower than the traditional financial markets, which has never happened before. So we're facing a very interesting period right now of massively reduced volatility, pushing in a huge sideways range to the end of a potential descending triangle formation, or at least the apex of whatever pattern this may be on the macro. Okay, so we are expecting a big move as volatility drives up and the price condenses like a pressure cooker, pressing, coming to this apex between these 2 converging trend lines. We see an explosive move. We generally see a big move, and what is going to be the trigger of that move? It's hard to say for sure, guys, but we are going to see a big move soon. It's going to happen. I would not expect this range to just continue, guys, for another few months. I don't expect it to happen. If it did, it would be absolute max pain right there. I do think we're either going to see a big move up, and a big move up, we're talking back to 22k, you know, back to above this range over here, above this range over here, this level, you know, so this resistance level. We're looking for a move back above that range or to that range, or we're seeing a move back down. A move back down, you know, we're either retesting just 17.6 absolute bottom, or we're seeing some sort of scam wick below, or potentially, guys, even heading lower. But we'll talk about that one later on in today's video. We'll get into it and talk about the analysis. But those are some possibilities we're expecting to see. And I believe the next weekly move, and these are all weekly moves, I believe these next moves will occur, or should at least commence pretty soon, guys. If we take a look at this over here, we don't have long now. It's pushed back a few days. We're looking at, you know, 28th, 29th of October. And obviously this is happening before the FOMC meeting, before the interest rate hike, which is another issue, guys. We could see some very bullish price action. Price could go up, and then interest rates will come out very, very bad. They come out at 1, and it can knock the price back down, and vice versa. We can see some very bearish price action. It could crash all the way down. Then we see the FOMC interest rate come out positive, very, very good, very bullish, and we pump back up. So there's a lot to take into mind over here, and I feel like taking this in think about this collectively: low volatility, prices pushing massively sideways. The price action hasn't really been respecting trend lines very well, short-term structures, or just general analysis lately very well. And then you take a look at the charts, and we're above that 19,000 support. We're really, really close to absolute bottom. There is going to be a lot of indecision. There's going to be a lot of conflicting opinions in the market, and indecision, conflicting opinions, and anticipation for the next move is all collectively causing the volatility to massively drop. And we talked about this a lot, but we'll talk about it again. During 2018, we did see a very horrible bear market. We saw a horrible bear market. But during 2018, there were a lot less leveraged traders. It wasn't very big back in 2018. And as we see more leveraged traders and lower volatility, we generally see supports and resistances not holding as they should. And we see a lot of scam wicks below, we see a lot of fake outs above. And it becomes increasingly hard to trade these structures when the price action is acting a lot more sporadic. And that is another reason why in the last few days, you would have noticed we've seen many, many fake outs to the upside, and all of them get rejected. We saw many fake outs to the downside, all of them get bought back up. And this was this never ending zone of just chaos essentially for the last few days, and it's been going for about a week and a half now. And again, this should be coming close to an end soon. Anyway, one more thing I want to talk about is the historical performance of Bitcoin in terms of, you know, monthly performance percentage wise. So what we're going to do, I'm not actually too sure how to find this on here, but we're going to go ahead and take a look. I don't use this, I really don't use this much, to be honest, but it should be somewhere over here. What I can do actually, guys, is what I will do is just go ahead and bring it up my Telegram. I don't use this website much. Like I said, I'm not a very big on-chain person, so you won't really catch me using it as much, but hopefully you can see it over here. As you can see, October is coming in negative currently, which 4 years ago, we saw 2018 come in negative. 4 years prior, we saw 2014 come in negative, again confirming the bear market. So we should most likely see October close out red. It'll be very, very rare to see October close out green. Now, November's historically quite bullish. As you can see, we've had 3 red months out of a total of 1, 2, 3, 4, 5, 10 months. So 7 have been green, 3 have been red. So statistically, we are more likely to see a green November, which again can support the fact that we could potentially see that swing upwards from here to 22,000. Now, there is a few things I'm worried about, and we'll come back to everything later, but I've been talking about this chart for a very long time now, guys. We've been talking about this for so long, but this is still something I'm massively worried about. And I've gone ahead and added a few extra lines here. And most importantly, I've added this extra upper line here. And I'm going to go ahead and name this the danger zone. And this is really the danger zone for the total cryptocurrency market cap. If we lose this level, we can expect Bitcoin to as well lose this horizontal support. Now, if we lose this horizontal support, we will see a wick potentially down. But what that means, it exposes us to a possible drop below 18,400. And already, if you've been watching the channel, you would know 18,400 is that trigger level for us to see a drop and crash back down to 17,600. So, getting quite tight over here, guys. We would really like to see the total cryptocurrency market cap hold above 860 billion. Holding above 860 billion will at least give us a chance to see another bounce back upwards, potentially up into this range. And of course, that is where Bitcoin will most likely go up to reach that 22,000 level, and obviously reassess what is happening at that point. DXY, guys, it is looking okay. DXY seems like it's been on the edge of dying for the last few days. You know, it looks like it's going to die and then it pumps back up. It looks like it's going to crash and it comes back up, and it's just over and over and over. But what it does look like on the DXY now, it almost looks like we're forming some sort of flag formation over here. Obviously, it's very hard to do any form of standard analysis on the DXY because of the nature of the DXY. It's just impacted by so many different factors. But as you can see over here, assuming this flag hypothetically does play out and we push upwards, this could potentially take us up to 117, up to 116, which is why I believe we could potentially top out if we do reach a level. I don't think we're going higher than 117, 116. Worst case scenario, we go up to there. But if that does occur, guys, do remember, total cryptocurrency market cap will drop, Bitcoin will drop, and potentially hit to a new low. So it's very important to keep in mind that that will occur. Now, we do have to factor in the fact that Bitcoin has been moving basically sideways and the stock market has been still dropping. And that is something to keep in mind too. As the DXY has been rising, Bitcoin has basically moved sideways, but the stock market has continued to drop. So it leaves us to believe, will this trend continue? Will this pattern continue where Bitcoin holds up better than the stock market if the DXY does continue to rise and interest rates come out negative? It is of course possible, but the low volatility period is basically what's causing that. And I believe that low volatility period is coming to an end as we breach out of this apex, and therefore volatility should start to ramp up in the market at least the 28th, before the 28th, or onwards after the 28th of October. So getting quite interesting, guys. Definitely something to keep in mind on. But let's go ahead and discuss potential price directions. So what we need to do is a quick analysis. Let's go ahead and just go through all these charts, and here is a blank chart. So we're going to go ahead and input our major horizontal supports, resistances, and talk about potential price swings from here. Let's start on the 12-hour chart. Obviously, I made a blank chart today just to make it nice and easy for everyone to look at. We'll go ahead and chuck in our horizontal levels here. So we have a horizontal support over here, and I might actually change that to a horizontal line instead. So major horizontal support over here, and in fact, this is more or less a horizontal support range. So we'll go ahead and pop in this horizontal support range. As you can see, these two green lines, the distance between these two lines is support. This is currently support. Now we'll go ahead in and pop in our 18,400 trigger. This is a 18,400 trigger over here. A loss of this level sends us back down to our absolute bottom, which is 17,600. So what we're seeing currently here, we're seeing support, okay? If we lose the support line, we could bounce here. If we lose this level, that is confirmation we're heading lower, all right? So that's what we're seeing in terms of price action-wise. Moving up from here, we can go ahead and input some of our trend lines. Obviously, we have our large, very large time frame macro trend line over here, and this can extend downwards, and obviously this retest these lines here. We did see a breakout of this level actually twice a few days ago, which was over here, but instantly faked out and came back down. I would really like to see another breakout of this level for confirmation, but of course, guys, of course, if you want absolute confirmation that this level has broken, you want to see a price move above these highs. So if we see something like this, that would be confirmation we're going higher. Clearing these local highs over here would be very indicative that the price will continue upwards. Until then, it is still a little risky breaking through here and taking an entry, just because we have now seen that trend line not be respected. So it could potentially not be respected again. So we do have to be a little bit cautious about that. Obviously, the safest entry, guys, will come above 20,500. Go ahead and pop that one in over here. 20,476 to be precise. We can go ahead and draw this one back. As you can see over here, let me go ahead and pop that one in perfectly. This has been a very key level of resistance and support on the chart. Go ahead and label this one over here. You can see breakouts, a lot of resistance, a lot of support. Again over here, and over here. Breaking through this level, guys, sends us up to $22,000, which is this point on the price chart right over here. Again, another very critical level. A lot of support and resistance found at these levels. Again, potential retests and rejections found at this level. You're going to see how that lines up with the price action. So breaking through this level here will give us a chance to move up to 22K. So this is how we build up these points. We're going to build up to the upside first, and we'll go do the same thing to the downside to make you guys aware of the triggers. Moving upwards from here, guys, the next key area of resistance, and actually I'll show you on this chart. If we go all the way back over here, we can see it where it is over here. The next key area of resistance is in fact this little range we have right here. Okay, not a very big range. It's a little range right over here. 22,600, 23,800. Let's go ahead and now input that on this chart. 23,600, okay, to 23, oh, was it 23,600? 22,600, my bad. 22,600 to 23,800 is that next very key level. We can go ahead and extend that one backwards, 23,600. You can already see how this is lining up with the price action, okay, to 23,800. We'll go ahead and pop that one in. Just want to make it nice and neat. All right, perfect. So as you can see here, 23,600. We got rejected at this point. A lot of support at this point, okay? A lot of rejections at this point when we break down again. A lot of support and rejections. You can see how these levels are starting to line up on the chart. You can now see how important these levels are at dictating the price points. And we're in this larger range now. We'll come back to it and talk about it in a second. But breaking past this level here, we will inevitably be moving upwards. This is that major weekly trigger for the next move up. Where is that next move taking us? Very obvious, all right, 25,300, okay? Moving up from there, we have next resistances sitting much, much higher. So when we're looking at 28,500 to that $30,000 range, which is here, okay? That is that major level we need to break. So a lot of gaps become quite obvious as we start climbing upwards. And of course, if we go to this chart, you can see that as that gray box a little bit more obviously on that larger time frame. So that is what we're looking at for the upside, guys. Of course, if we go ahead and assume we drop to the downside, we're looking at 16,500 potential bounce point. Losing that, basically guaranteeing that price point will come down to 13 to 12, okay? 13 to 12 is what we're looking at. Again, if we go to the larger time frame, we can see this on the chart over here. We can see massive support within this range at 13 to 12, right over here, right over here, right over here, and again over here, right? Basically coming down and touching that upper neckline of this entire, you know, we're looking at a two and a half year period neckline. So that will be potential support zone if we do actually drop through that level. That is what we're looking for, okay? So keep in mind, guys, you know, all of this is obviously very speculative right now. You do have to basically assess it as it comes and act as it comes. It's very, very hard to say exactly where we'll be going. All I can tell you is if we do break these triggers, we do have higher probable chances that we continue in that direction to the next trigger. So it's very, very hard to say, particularly right now, of where the price action is. Are we going to go down here first? Or are we going to go here first? It's hard to say that, but I can say if we break through this level, we're very likely to go here. And I can say if we break through this level, we're very likely to go here, okay? While we remain in this apex, we're going to see a lot of volatility. It's going to be very hard to predict exactly what's going to occur. And the best thing to do is to remain calm, patient, collected, and wait for these triggers to break, like we've been saying for the last 5 weeks. Wait for triggers, then invest, okay? You can try a scalp trade. We've been scalp trading this month. It's probably been one of my worst months scalp trading in the last 4 years. It's been a very difficult month to trade in, but you can still do it, all right, as long as you remain calm and don't invest too much capital. But your bigger investments in terms of capital, in terms of potential profits, should be taken when the price action has clarity. Right now, there is no clarity in the price action. Therefore, you should not be risking too much, or at least not more than you can afford to lose, okay? That is what we think is going to happen, guys. If we do break down from this level, it will be bad news. Now, one thing for the bearish case I do want to talk about, and I guess this has been talked about a fair bit. I've seen it all over Twitter lately, so I guess why not? Let's talk about it even over on Lizard. I will go over it and share my thoughts on it. So as you already know, if you've been here in 2018, if you're around here, we saw something quite similar. I'm not going to lie. You know, we did see something very similar, and that was we saw not only the volatility. If we find 2018, where's 2018? 2020, 2018, June 2018 over here, October, November 2018. Let's go to the price action real quickly. October, November 2018. So here it is. This is what we're looking at, okay? And then we'll go to volatility, October, November. We saw the volatility at 1.42 to about 1.5, 1.8. There's a little period over here. There's a massive reduction in volatility, very similar to what we're seeing now, a massive reduction in volatility. Not only did we see the volatility drop, but we saw a very similar thing. The price action became very stagnant. We're talking incredibly stagnant, and we only really had these big explosive moves on news releases. These were economic releases, economic data. But besides that, we had very tight price action, okay? We're seeing very similar thing occurring here, not only in terms of volatility and reaction of price, but also in terms of, I guess, the structure that we're seeing, which is a potentially descending triangle. And you would know descending triangles are bearish patterns. We saw it here, and we're potentially seeing another one over here. If a bearish triangle breaks to the downside, we do continue down. It is a bearish pattern. We do expect a continuation down, okay? In this instance, from this breakdown point, we saw a 47% drop down, okay? That would take a collective drop from the peak of 83%. If we do see that same thing over here, let's take a look. I don't really do as much, but we'll take a look, okay? I believe the top was here, okay? We take a move down here, and it was a 47% move down from here, okay? 47% will take us here. That would take us down to 84%. So there's a possibility, guys, that we do continue downwards here in terms of percentage date range trends. Of course, Wolves of Crypto has talked a lot about the 4-year cycle. This is where I stand about that. I believe the bottom's in. In terms of technical analysis, the bottom is in, okay? And bottom's in. This is the thing. We are still in a period of economic times that is very uncertain. And we're seeing things happen this time around that should never happen, or shouldn't have happened, or has never happened before. Very important to keep in mind that if we eliminated all economic data, we would have bottomed. The bottom will be confirmed. When we factor this economic data in and potential economic implications on the financial markets, we have to assume there is still a possible downside. And that's what I've been saying this entire time. Be wary, be cautious, don't be too ballsy here, okay? We did buy Bitcoin. We bought Bitcoin at $18,000. We bought Bitcoin over here at $18,000 on the 18th of June, okay? Been holding ever since. We bought 30% of our USDT worth. If we drop lower, we accumulate more. If we go higher, break through this level, get more confirmation, we accumulate more, okay? Simple as that, guys. Stay steady, stay calm, relax, don't be too panicked about the price action. At the end of the day, wait for the bull market, guys. What you should be doing now is learning. Learn how to trade, practice, understand what is happening in the market, build your knowledge, build your expertise, build your wealth a little bit, okay? Your biggest gains will come in the bull market. You want to go into a bull market prepared. You want to go into a bull market knowledgeable about how a price action works, how trends work, how to identify trends, how to spot breakouts, how to spot fakeouts. This is the best time to do it. This downtime in the market, like we've been saying, the whole bear market is the best time to do it, okay? That being said, I hope you enjoyed today's video. It's quite a long one, but we'll catch you guys in tomorrow's video. I hope everyone's had a fantastic day. We'll see you then. Cheers. So we're going to quickly have a discussion about Bitget. Now, if you follow the channel, if you're on our Telegram, if you're on our Twitter, if you like the content, enjoy the videos, and just find what we do informative and beneficial, go ahead and support the channel by clicking the sign up link to Bitget and trade where I trade. Now, there's about 10 different good reasons why I'm suggesting Bitget, and obviously I've made the swap from Binance to Bitget close to a year ago now. Last year in September, I decided to go to Bitget and trade on Bitget, and I'm going to go through the reasons why you should actually come over and trade on Bitget too. So first and foremost, guys, if you like spot trading, obviously 0% trading fees on spot. They've got over 260 coins here. Basically every popular coin you can think of is on Bitget. Basically all the coins on Binance you can find on Bitget. Another really good thing is it is global access, meaning there's no global restriction on who can sign up. Doesn't matter what country you're in, where you're from, you can sign up to Bitget. And the reason they can do that is because they do no KYC. KYCing on this exchange is completely optional. If you want to trade on a decentralized exchange where you don't have to sign up, you don't have to have your government information in there, this is where you want to be, completely decentralized. Another really good thing is they obviously have very low trading fees for futures. It's around 0.02%. Now they have around 60 to 70 different trading pairs on futures and are adding more every couple of weeks, so it is steadily growing. They also have a security fund, so if the exchange ever gets hacked or you get hacked, you can actually request a refund or a compensation from the exchange. They have, I think it's like $80 million, or if not more, $800 million or something close to that in the security fund that actually pay out to their users if anything catastrophic happens. So obviously signing up the link, you'll get access to all of that, but there's a few beneficial and extra things you get access to if you sign up the link down below. You'll get access to the reward center. Now on the reward center, there's about 5 separate tasks, and they're trading tasks. If you complete those tasks, you can make up to $4,163 just from actually trading. And the second thing is, if you sign up with the partner link down below, you are actually registered underneath my partner account. And what that gives me availability to do is I can actually adjust your fee kickbacks depending on your trading volume. So you actually get paid to trade on Bitget. You'll get kickbacks based on the trading fees you use. For example, on the 3rd of October to the 10th of October, we are doing a running campaign where 10% of the fees you pay on Bitget, you actually receive as compensation as USDT directly to your account. These are some of the things I can do. I can assess your trades, I can monitor your trades if you need advice, I can actually see what is going on, and obviously the fees are very, very small on Bitget. That being said, guys, that is all I want to talk about Bitget. If you want a more in-depth analysis and video about Bitget or how to leverage trade, go to our channel and click the video how to trade on leverage, and we talk you through Bitget and a little bit more. Thanks guys, we'll see you later. Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.